just doing a weekly review here of NFP week. So most of the week was pretty shit, first week of the year, and got caught here on the trade during Thursday's price. It's during the New York session. Obviously a little mistake, but to be honest, most of the week hasn't really done much for the first one of the year. But as you can see today, we have NFP. So I'll just break this chart down for you. So, move this here. So NFP Friday's price trading over here. Obviously we have the opening at midnight. Price just not much really happening here in euro. Just a lot of back and forth. Little liquidity pool resting right there. Bit of a retracement on price came up here, just shy of London session. Or no, it is during London session. And then after that, close of London, market just retraced all the way back up into this up closed candle, and essentially reclaimed itself against that candle there. Came down just at the news release, smacked into this little level here, these two blue shaded, well, two blue lines. If you go to a weekly time frame, let me just go over here. We have a weekly volume imbalance. So let me just show you there. So between these two candles, also kind of a bullish order block on a weekly time frame. We have an inversion fair value gap here on a higher time frame, right in there. From this candle's low to that candle's high. Price came down here, obviously in December, smacked into the bottom of that. Traded off of it. Obviously traded past these two close down candles, activating the bullish order block and leaving on a weekly time frame that little volume imbalance there. So that's that. Okay. So here was where I was trading on Thursday. From that candle's low there to that candle's high, in between that area, it's a little fair value gap right there. Price came up to it. It was just a lot of back and forth, so I was just getting caught up in the bad price action, to be honest. So I took the hit there. There's two losses, doesn't really matter. Keep risk in check. And then, as you can see on lower time frames for NFP, break it down to a 3 minute. Price came down nicely, smacked into that area. If you take a range of that with the Fibonacci, that gives you, obviously, this is all just one swing range essentially to give you your target prices with the fib, and came up here to half a standard deviation. One didn't quite reach 1.5 standard deviations, but I'll bring you here now into a 1 minute just so you can see a little bit more clear. So we have a breakaway gap right in between those candles here. When price came down here, that was all just looking to be refilled essentially. When the price came back up here and left this here, I was expecting this not to be filled. Act as a breakaway gap. Then if you look here, now it could have hit into that. I'm not saying that it wouldn't. It could have, but in turn it'd just be seeing that go off of that as obviously the market expands up. And when the market traded up here, you have this last down close candle here, treated that almost like an order block and tapped off at that level there, which is the liquidity pool and everything resting under there. Sorry, I need to go back here. And on the 5 it was clearer there. So see these dotted lines on a 15-minute time frame. That's it there. Which is a fair value gap slash buy side imbalance, sell side inefficiency that was formed on Wednesday during just the beginning of PM for equities. Anyways, price tapped into that, acted as a bullish order block, expanded off of that. Here again, when it smashed through this level here, it left the fair value gap there. So price traded up back into this range here, this whole consolidation right there. All this is just like one big consolidation. Came back up in against it. Acted obviously as a form of like resistance, and then came back into the fair value gap here. So the market makers were buying at fair value at a discount. So when they traded back up into this green area here, obviously that acted as like a bullish breaker. You're low, you're high, low, and price comes up, smashes off of that, comes back down in here to that little fair value gap. Boom, trades through that, hits this level here, which is this high right at the open of the day, taps into that. Then once it comes past up here, it just kind of starts to kind of wiggle off really. Not much else really happens for the day. And then, boom. I don't know why I said that, there's plenty more to see. So, as you come over here, this was the news release during PMI. So, yeah, with PMI at 10, New York time. And when that news release just hit the market, price just gapped straight up, further up into these levels here. Could have held it throughout, obviously all the way till 11, but this essentially here between 10 and 11 in Forex is profit taking hour. So I'll just label that there. Profit taking time between 10 and 11. Oh. Taking hour for Forex. Okay, and as you can see on the news release, came up here. Kind of glad I got out there, because as you can see, the high was literally a couple of minutes after of that whole hourly range, which is kind of nice. So didn't really, usually when you feel like you should close the trade, it's probably your body telling you should close the trade, and obviously you're in that hour as well, so you put 2 and 2 together, there you go. But anyways, that was a good NFP day. Wouldn't really be trading NFP, but like looking at the whole week, it's obviously been just shit price action. So the market makers were obviously just like engineering liquidity for this whole day, or for the whole week, just waiting for Friday's NFP release, and then just smack all other traders out of the market. Apart from obviously if you got up here, but he was trading that. So essentially that's it. If you liked the video, please like and subscribe. Until next time, safe trading.